Hi again, everyone. This is Bob with LoanModificationUSA.com, and I have for you now part 1 of mortgage loan modification, why principal reduction is your best option for loan modification. As Bob Dylan once said, the times they are a-changin', and this has never been more true in the mortgage industry than right now. In the last 4 months of 2010, revelations of widespread mistakes and even outright fraud in the processing of home foreclosures has come to light. This has caused lenders across the country to suspend foreclosures until the mess is sorted out. But this is nothing compared to the mess that is MERS, or the Mortgage Electronic Registration System. You may have heard of MERS or seen it on your loan documents. Lenders used MERS to track the sale of loans in the secondary market rather than recording a notice of assignment at the county records office for each sale of a mortgage. Over 60 million loans were registered in MERS in the last 10 years, and all of them are candidates for principal reduction. The problem lenders have with MERS is twofold. First, the courts have ruled that it is just plain illegal to not record a notice of assignment when a loan is sold. Courts have dismissed foreclosure proceedings across the country as a result of faulty paperwork. But it's the second problem that is by far the biggest for lenders. You see, because the loans were sold on the secondary market, the original lender is no longer the owner of the note. Also, lenders tried to have MERS foreclose, but MERS is only a nominee of the lender and can't foreclose. By law, only the actual owner of the loan can foreclose. Neither the original lender nor MERS have the legal standing to bring a foreclosure proceeding against a defaulting borrower. Well, even worse for lenders is the fact that many loans were sold in pieces to different investors in the secondary market. Rebuilding the actual ownership structure is extremely difficult and may in fact be impossible. In effect, by using MERS, lenders have created a situation where there is no discernible owner that can initiate a foreclosure. Because of this, courts have ruled that these loans are now unsecured. Well, that's the end of part 1 of mortgage loan modification, why principal reduction is your best chance for loan modification. To learn how you can get a MERS principal reduction, be sure to continue on to part 2, where I'll describe why principal reduction is your best chance for loan modification and how you can get a MERS principal reduction. For now, thank you for your time with part 1, and be sure to continue on to part 2.